evening all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Tuesday, the 18th of May, 2021. Interesting times, isn't it? Is the sell May go away? Is that going to work this year? So far, market is down, but markets are always down mid-month from whatever peak they make. That's not a surprise. We have to see if more takes place, but traders are talking that. If you're noticing interest rates, they have just sort of flattened out. They're not a story anymore. They don't seem to want to go back up into the 175 area or back under the 16 area. So they found a bit of a home. Bitcoin getting the heck beat out of it. The market is down a third in price in just, a week and a half or so. And with it, it's taking the other cryptos downward at this point. Energies, new high for the move in Brent today. Will it be able to hold on? So when we go over to a market like ARK, which has been in a big decline, the question is, when does the bounce come? This is the first step that it might be taking place. When we put on the swing lines, you had a pattern change today. This is how you were yesterday, with lower highs on the swing line and lower low. And remember what the swing line is. If you take my charting course, I explain this. You will be able to look at a chart and draw it by hand when I'm through with you. I use PowerPoints and real examples and give you the charting software in the course. You go to that chart and you learn to draw it by yourself and then let the indicator take over. But if you can't draw it by yourself, then you don't understand it. How many tests did you take where you just memorized formulas but you didn't know what you were doing? Now you're using your money. I think you want to know what you're doing. If you take out 105.84, you break the pattern of lower highs and lower lows. That's what the market has just done. When you look at moving averages, you have that bearish crossover that I've been prepping you for. I said to you last week, I didn't do an update for you Friday, but I did. I brought you back the other night and showed you Thursday and so on. Keep your eye on that. Now you've got a market that crossed over yesterday. And tonight you can see the crossovers complete. Okay. That's often a bearish sign, but it does not mean that the market has to just immediately fall apart, but it's putting together that this is a pretty strong resistance area. Could it break right through it? Of course it could. I mean, there's no magic there, but the odds of charting are that it won't, that it's now a resistance point. When I look at the Bollinger Band, you stepped away from it. You can see that, and finally you resolved it by making a higher high. That doesn't mean support can't come in at 94.42, but, and there is a but, in momentum, you lost today the embedded reading. You closed over 20. Now watch this. All these other days you were sitting there, both numbers under 20. When you get a reading over 21, I teach that I want you to get out of an existing short position. The odds favor unless it re-embeds tomorrow. And the only time you can re-embed is both numbers going back under tomorrow, 20 on the close, staying there. That's called re-embedding. If it doesn't, and one of them, just one of them, is over 20, it can be by a tenth. It's not re-embedded. Without it re-embedding, the odds favor price is going to try to get up to wherever that 18-day average is. So that's one of the percentage trades that I look at. Not to trade it necessarily, but I know not to be short. If you want to pick a bottom, some traders will use this, by the way, and say, okay, I'm going to try that. It's wrong if you take out 97.20. The most was that 28? I forgot myself. 97.22. If you hit 97.21, my theory's then wrong. Otherwise, I'm looking for the price to get up there. In GameStop, I wouldn't touch it. I still have said to you, until it breaks out one way or the other, I would be sitting there going, as your teacher, why would you be doing that? You're in the psychiatry trade. You get up to the upper band, you don't go anywhere, you get down to the lower band, telling the kids, hey, this is it, we're going to see it fall apart, it doesn't fall apart. You have to be a contra-trend trader, which is something I'd refuse to do, and you're overbought into the upper Bollinger Band. PAVE, I wouldn't want you to be long anymore. We talked about it, you lost the embedded reading. Why is this so difficult to understand? You got under 80, any reading at 79 or under puts the odds. That's all I can tell you. The odds are price is going to make a run at the 18-day average unless it re-embeds the very next day. And I'm wrong in my thought if you make a new high on this move. Doesn't do it. Goes right there and rewards the pros that understood that, and now the market's just sort of drifting, not doing a heck of a lot one way or the other. Trend is down. We're supposed to get the Republican plan for infrastructure this week. You know it's not going to meet the Biden plan, so the question is this where everything gets together so that it's close enough they can compromise, or a logjam where now what's the next step? That uncertainty's got this market shook. Apple, still in a bearish pattern, but very oversold. Support the 200-day average with the lower Bollinger Band. You had an outside day down today. So if on Wednesday or Thursday you take out today's high of 126.99, the odds are that the market's going to make a run for the closer of at that time, the 100-day average or the 18. Now there's another piece of bearish news developing here. The 18-day may get under that 100 tomorrow. That would be bearish. It'd be a bearish crossover, admitted into an oversold condition, but still bearish as a chartist. When I look at XSD, the semiconductors, number one, the market's now got higher lows, higher highs. Number two, you're still embedded. So the pros have not come out of their shorts. They will, in my opinion, doesn't mean I'm right, if you get a close over 21 in the slow stochastic, but until then, they're thinking that this is where the market's going to fail and make another run to the downside. That's how I'm reading what the chart is saying. PODX, when we talked about it, I said first challenge of the Bollinger Band. That's where I think the pros are coming out. Haven't changed my opinion. You're oversold. You're getting a bounce in the market. It's not a trend change. But oversold conditions generally don't beget new shorts coming into the market, new short sellers. In ESGU, the trend is down. Lower highs, lower lows, momentum flat to pointing down, bias down. I think the pros are selling short at 95.21. I think that they could look at 95.36 as their stop. They might even reverse to the long side. Why? Because if you got over that number, you could end up with higher lows, higher high over the 18-day average. So it could be a stop and reverse to the long side and then a stop back under whatever the low is. I've gotten caught in those, but when you catch them, they're so sweet. In XLE, you've got a market that's overbought. I think overbought drives away new buyers. I would be watching. I don't see a trend. I certainly see that you've gone up for the highs. I'm not blind, but you got lower highs, higher lows, well rather lower low, higher high is what I meant to say. That's not a trend. Emerging market ETF. Well, didn't this resurrect itself from death? Remember we talked about this vertical price decline. You came from the lower Bollinger Band to the upper band, made another attack down here. Now you're going up, and will you attack the upper band? I wouldn't be surprised. Could it fail there? I expect it to fail there. I need it to break out of this one way or the other, but longer term, I'm with the bulls on this market. I do think that ultimately this is a base going to work higher for all the fundamentals that are behind interest rates eventually and world economy eventually going to be bullish for those type of markets. In gold, I look at the market with an embedded reading. I think it's time that you can start employing what I teach in my enhanced Bollinger Band course. There'll be an ad about it right when I finish here. This is one of the setups. Why? Well, both numbers over 90 today, both over 80 today, over 80 yesterday, over 80 the day before and the day before. So now it's a question of where do you buy and how do you buy. I covered that in the course, but I am in the bull camp until you lose the embedded reading. You're overbought here. I never would tell you to buy over an upper Bollinger Band. The trend is clearly to the upside. This market's counting on gold to hold those gains. TLT remains in the bear camp, but again, when you're this oversold, I don't think you attract a lot of new short sellers. In the foreign currency market, if you were sitting next to me and you're hit a Bollinger Band for the first time and the trend has been to the upside and long, do you think I'd give you that elbow and say, don't you think you should take some money off the table? You know I'd be doing that. So you put it all together, we have some fun, but I'm dead serious when I say, take a look at this Bollinger Band course. I think that you will find things in here you've not seen. I think they're so easy to follow, and I think they give you a new look at how to enter a market. When other people think, oh, it's too overbought, it's just staying that way, you understand the difference and you're playing the pressure in the market, keeping the market going. Take a look. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.